Let me guess. You heard the word taxes, and your soul briefly exited your body. Because taxes feel like this strange adult DLC nobody asked for. Confusing, expensive, and one mistake away from penalties. But today, I'm going to do something rebellious that I'm going to make taxes. Make sense, not accountant sense. Regular human sense. The kind that helps you pay less legally, avoid penalties, and know exactly what to track. So you don't panic every March. Quick note, I'm not your personal tax advisor. I'm your tax tour guide. I'll show you the map, the shortcuts, and where the traps are. But if your situation is complex, confirm with a qualified professional or your tax authority. Now, let's enter the kingdom of taxes, where the gatekeeper asks only one question. Did you keep receipts? Meet Ada. Ada is not a billionaire. Ada is not hiding money in Switzerland. Ada is just trying to survive. Ada has a salary through PAYE, a side hustle through freelance or online business. And one terrifying weakness, she doesn't track anything. Then one day, Ada needs a tax clearance certificate for something important. A visa, a loan, a contract, the usual adult suffering. And suddenly, taxes stop being later and become right now. Ada's story is basically everybody's story. Taxes become urgent when life demands proof that you're compliant. We're going to give Ada and you 3 weapons. Understand how taxes actually work. Use legal reliefs, deductions, and credits properly. Track the right things. So compliance becomes automatic. Most people think taxes are random. But taxes are usually just a chain. Income, to reliefs and exemptions, to taxable income, to tax rate, to tax due. If you understand that chain, you stop feeling cursed. Step 1. What income counts? For employees, authorities generally look at emoluments, salary plus certain allowances and benefits. For self-employed people, they look at business income minus allowable costs. Depending on the rules. Step 2. Reliefs reduce your taxable income. In Nigeria, one major relief is the Consolidated Relief Allowance under the Federal Inland Revenue Service. It's commonly described as the hire of 200,000 naira, or 1% of gross income, plus 20% of gross income. That alone explains why 2 people with the same salary can pay different taxes. Taxable income is not the same as gross income. Step 3. Tax rates are progressive, meaning you don't pay the top rate on all your income. Only on the portion that reaches that band. Nigeria's personal income tax structure is often summarized in bands like 7%, 11%, 15%, 19%, 21%, and 24%. Applied in slices. The tax system isn't a lion that eats your whole salary. It's more like a goat that eats your salary, slice by slice. Ada discovers the kingdom of taxes has 2 major provinces. Province A, PAYE for employees. PAYE means your employer deducts tax from your salary and remits it to the relevant authority. Employers also have annual reporting obligations. Guidance from the Joint Tax Board commonly references filing annual returns of emoluments by the end of January. Province B, self-employed or side hustle income. If you earn outside salary, freelance, trading, content creation, consulting, you must treat it like a business for record keeping and reporting. Your relevant authority is usually tied to your state of residence, often through a state internal revenue service. Many people are compliant on PAYE, but their side hustle is invisible. And that invisibility becomes a problem the day they need official compliance proof. To pay less legally, you don't need magic. You need to pull 3 levers. Lever 1. Claim the reliefs you're entitled to. The Consolidated Relief Allowance reduces taxable income. Other statutory items are often treated as deductible or exempt under personal income tax frameworks, such as approved pension contributions, housing fund contributions, health insurance, and life assurance premiums. Depending on your specifics, Ada realizes something painful. She wasn't overtaxed because the system hates her. She was overtaxed because she never presented the system with the facts that reduce her tax. Lever 2. Separate business money from personal money. If you're self-employed or running a side hustle, use a separate account, even if it's just disciplined separation. Track income and expenses cleanly, because if you can't prove a cost, it's just a story. And tax authorities don't tax stories. They tax records. Lever 3. Structure your record keeping so it's automatic. That Ada's next discovery is that penalties rarely come from evil. They come from silence and lateness. Trap 1. Missing filing deadlines. Under Nigeria's personal income tax framework, individuals are often described as filing returns within about 90 days after year-end. But always confirm your exact deadline with your authority. Trap 2. Employer deducts PAYE but doesn't remit. You assume you're fine because tax was deducted, but remittance matters for compliance proof. Trap 3. Late remittance rules. Rules commonly referenced under the personal income tax framework describe remitting deducted taxes within about 30 days of deduction, with penalties and interest for default. Different authorities issue practical guidance. So the safe move is to follow official publications from bodies like the Lagos State Internal Revenue Service or your own state equivalent. The tax system is like a strict boarding school. The punishment is rarely for being dumb. It's for being late. Now we reach the sacred artifact Ada needed all along. The scroll of tracking. If you track these things, taxes become boring. And boring is the goal. If you're an employee under PAYE, keep your monthly payslips. Keep your annual tax deduction summary. If available, keep evidence of statutory contributions like pension. Keep documents needed for any tax clearance processed if you're self-employed or running a side hustle. Maintain an income log. Amount, date received, client name, payment method. Maintain an expense log. What it was, business purpose, amount, receipt. Keep bank statements as backup evidence. Keep proof of allowable reliefs. Keep your TIN and tax authority details. For TIN verification, use official portals coordinated through bodies such as the Joint Tax Board. Not random screenshots from social media. Here's a simple system. Create a folder called Tax 2026. Inside it, create subfolders: income, expenses.pay or salary, reliefs, every time money moves. Drop the receipt or screenshot the same day. Ada does this for 30 days and realizes something shocking. It takes less time than scrolling social media. And it saves real money. Here's the mental model I want you to keep. Taxes are calculated on taxable income, not gross income. Reliefs and exempt items are legal tools that reduce taxable income if you don't document it. It's like it never happened. Compliance is mostly deadlines. Plus proof. That's the whole game. Ada files correctly. Ada can prove what she earned. Ada can prove what qualifies for relief. Ada stops fearing random emails with words like assessment and penalty. She doesn't become rich overnight, but she becomes something more powerful. If you want, I can make a follow-up where we walk through a simple example calculation, show a tracking template, and explain deductions versus reliefs in plain language. And remember, the goal isn't to be clever. The goal is to be clear, because clarity is how regular people win high-stakes games.